Hedge funds are down bad for the month of November as well as December, and we're going to talk about that here in this video. But let's first off acknowledge the daily chart that we are looking at right now. We've seen a major sell-off as soon as market opened today for AMC stock with two small bounces. We did hit that low of $26.82, almost immediately bounced up to about $30 per share. This was a very strong move and should show you guys, even if the hedgies have all of this money to throw at AMC, they are not able to push the stock down to very low levels and to actually keep it down there. We come in and we are buying the dip, and as we are doing so, we help support the stock. Ultimately, this will lead us to our massive tendies in due time. But this video is not going over that. We need to go over all of the data that you need to know for today, get you guys caught up, as well as go over this hedge fund situation. So if you guys are holding onto your stock, if you are excited heading into the new year just like I am, hit the like button for me, consider subscribing to the channel. Let me know what you think is in store for us in 2022. So let's first off start with the data that you guys need to know for the day. The Ortex Data, Stockholm Tracker data, the max PAYNE, as well as a tweet from Adam Aaron addressing the 8K filing that came out yesterday. So for the Ortex data, we are looking at 19.03% short interest of free floats. This is only the estimate. We know the short interest is a lot higher. That's why I say take this with a grain of salt. Once we get the exchange reported short interest data, we will know the bare minimum of the short interest, not including the hedge funds that use the option chain to make it look like they have covered. This will be the bare minimum. And like I've said many times, I think the short interest is in between 40 and 80% on any given day. They're severely over leveraged in these short positions. We know that. So all I'm saying, take this with a big grain of salt. We're looking at shares that are sold short of 97.68 million shares. Share utilization 77.67%, and the days to cover 2.35 days to cover. Still incredibly high, and the days to cover is going to start ticking back up in my personal opinion as the stock has fallen. You see this direct discorrelation where if the stock is going up, days to cover goes down. If the stock is going down, the days to cover goes up. So we have seen that. We're just waiting, in my personal opinion, to see the days to cover go back up again. And that's going to be incredibly bullish. Either way you put it, 2.35 days to cover makes it very hard for shorts to get out of their short positions if they want to very fast. And obviously, they don't really want to anyways. But when they're forced to, it's always good to have a high days to cover. Now, as far as the Stockholm Tracker data, keep in mind there's nothing too crazy for the next 3 weeks, but before you guys even know it, we're going to be heading into January 21st, 2022, which is that big expiration date. And for the call side, you're looking at 116,000 calls that are in the money. Right there, that's 11.6 million shares that will have to be bought by the market makers to fully hedge out these calls if AMC stayed at the same price. The calls that are out of the money, 438,000. That's potentially 43.8 million shares that will have to be bought by the market makers. And a lot of this open interest, like we've went over many times, about 57,000 of this 400,000 that is out of the money is held at the $40 strike. So it's not super far out of the money where we could see a big increase in share value based off of the market makers having to buy shares to hedge these calls. For the put side, nothing too crazy. 61,000 puts that are in the money, 309,000 puts that are out of the money. The only thing that's really going to cause shorting power to come to the marketplace is if AMC goes down substantially, because the puts are concentrated, like I've said before, in between the $20 and the $25 strike. So if we don't at least head down under $25, really under $20, you're not going to see a lot of these 309,000 puts run into the money. So you're not going to see a lot of shorting as well. If the stock just continues to go up, though, you could see a decent amount of de-hedging, which would mean the market makers having to buy shares on the open market to account for the 61,000 puts that could run out of the money. So that's what you guys need to know. Somebody asked me in the comment sections to report the dark pool percentage and the dark pool trading activity, and Stockholm Tracker does not have that right now, just a short percentage of 54.6%. We know a lot of shorting activity happens in the dark pools. So The max pain, that's what we're going to talk about next. Keep in mind, sometimes this holds true, sometimes it doesn't, but the max pain was $29 this week, and we're sitting at $28.56 per share. So the max pain did actually work for this week, but it's going to keep updating the closer we actually get to expiration for the next weeks, as well as the January 21st, 2022. The max pain is only $22 per share. I don't think we're taking a big move to the downside by then, but like I said, this will change the closer we do get to this actual expiration, and I will definitely pay attention to that because sometimes it does prove to be accurate. Now, we're going to get into this hedge fund situation right after we talk about the acquisition that AMC just made. And we've already talked about this before, but Adam Aaron said these theaters have previously been high traffic, successful locations in two of AMC's top markets, and we are pleased to offer the AMC experience at them a few months from now in 2022. These are prime examples of how AMC is staying on offense, looking for opportunities to strengthen our company through the acquisition of these popular locations. Our most recent acquisitions of AMC The Grove 14 and AMC Americana at Brand 18 are already showing their success, as those locations routinely finish in the top 10 theaters in box office performance among more than 150 theaters in the LA market and in the top 30 in the entire United States. So it's definitely a good thing seeing AMC acquiring high quality locations, and that's going to bode well, obviously, for the business in the mid and the long term. Now, what I really want to focus on here in this video as well, this article, hedge fund industry suffers investor redemptions in November, but still set for positive asset flows in 2021. In November, investors pulled $3.84 billion from the hedge fund industry, according to new data from EV investment, and November's industry-wide negative return of negative 2.05% further dragged on overall hedge fund industry assets under management, which stood at $3.57 trillion at the end of the month. So hedge funds took a 2% loss on average throughout the month of November. We know November was only the time the sell-off was getting started. So imagine what kind of losses they took in December. When we get those numbers, I think that's going to be a big red flag of what is going on behind the scenes, how these hedge funds are really set up, because there's no reason you should be dropping even 2% in November if you're fully hedged out for it. If you're remaining delta neutral in all of these positions that you're initiating, or a majority of them, you should not be losing that much money. 2% might not sound like a lot, but 2% in 1 year compounded over the whole year, what is that? 24% negative. So this could turn out to be a really bad situation for hedge funds, and if they are invested in these short positions in AMC, you're more incentivized when you're taking big losses to cover on your short position, crack the piggy banks per se, and get your collateral out of your short positions, because hedge funds, they cannot enter into all of these short positions without putting up collateral. It's the same thing if you wanted to sell a put, say an AMC $20 put, sell that put, collect a premium, but you have to put up $2,000 and agree to buy those shares of AMC if you are assigned to do so. So it's along the same lines. There is definitely a lot of collateral on the sidelines just allocated to these short positions. And hedge funds are definitely getting beaten into the ground. Now, the last thing we're going to get into before we actually do talk about the technical analysis and potentially this next leg up next week, Adam Aaron said 18 hours ago. If you guys have not seen this, we made a video about this yesterday, but for the sake of this video, we're going to go over it so everybody is on the same page. So 18 hours ago, another step forward, AMC's revolving credit facility lenders agreed to extend the existing covenant holiday for a next year. The next covenant test is not until June 2023. This ensures continuing access to our revolver and reflects our improving finances. This is a great sign. This is showing that banks have at least enough confidence in AMC to delay some of their payments they have to make to the bank so they can continue to operate and grow the business. AMC is also expected to be free cash flow positive, if not Q4, the first quarter of 2022. We have a lot of blockbuster movies coming out in 2022, and this is the best time to be invested in AMC heading into the new year, especially since AMC has fallen so much. Now finally, let's go over the technical analysis, and AMC is now closed and we are trading in after hours. We closed down 0.56%, in after hours up 0.11%. So a pretty much neutral day, overall a consolidation day. But like I said in the beginning of this video, we've seen a sharp recovery. So this was actually incredibly bullish. We almost, closed at what we started the day, and after this sell-off, that is a huge sign in my opinion of what is to come. Now let's look at AMC on the daily candlestick chart. We were not able to break out past the 200-day moving average, but we at least came up and retested this 3 days ago, December 21st, or 2 days ago, December 21st. So that is a great sign. And overall, we've had a strong bounce from $20 all the way up to almost $32 per share, where this 200-day moving average is at. So to see us closing above our support level at about $28 per share is a huge sign and a good step into the right direction, and will ultimately give us that room to make our next leg up and hopefully break out past the 200-day moving average. And this has shown to be a major level of resistance. So once we can break out above this, I think there is a lot in store for us, because we are also seeing the 50-day and the 100-day moving averages coming down closer to this $35 price. So if we can break out past all four of these lines right here, the orange, blue, the overall resistance level, and the 200-day moving average, you're going to see a clean break up, in my personal opinion, back to 48, or 45, 50, 55, or $60 per share. And we have been talking about this volatility in December and January due to all of the option activity, and now that it's here, you see a lot of shills coming out telling you why AMC is never going to squeeze, so on and so forth. I'm getting so many of those comments in the comment section, but that just shows you guys people are still watching AMC, waiting to get into the stock when this bullish trajectory is actually 100% confirmed once we break out past our resistance levels. People talk about an inverse head and shoulders. I see what they're saying, but it doesn't always prove to be accurate. If that's the case, we're going to have to fall back down to about $25 per share. I don't expect that to happen, but anything is certainly possible with a highly manipulated stock like AMC. As well as that, I do want to talk about the volume, because we are pretty much the same as yesterday. Yesterday was about 37 million for volume, and today was about 37 million for volume. And this is actually a great thing. We're going to go over in another video later on tonight why low volume is actually incredibly bullish, because you will never see a short squeeze with back and forth high volume like we seen back here, throughout the last 3 months or so, or in this range, just back and forth activity, low volume, high volume, high volume, low volume, high volume again. It just doesn't work like that. So you want to see the volume low heading into high volume, and ultimately I think that is what is going to happen. A lot of things in store, a lot of reasons to be very excited. I just want to say Merry Christmas to all of you guys. I hope you guys enjoy your holiday. Love and appreciate you guys. That's going to wrap up this video. I will see you in the next one.